Most people think you need to trade every day to make money in stocks. They stare at charts, they chase news, they panic on red days, they celebrate too early on green days. But here's the truth. The best investors in the world don't day trade. They don't predict the next move. They don't try to be smarter than the market. They use simple rules, they stay consistent, and they let time do the heavy lifting. In this video, I'll show you how smart investors actually beat the market without stress, without gambling, and without watching charts all day. Let's start with why most people fail in the stock market. They buy because everyone is talking about a stock. They sell because they're scared of losing money. They jump in and out, trying to time every move. But timing the market is almost impossible. Even professional fund managers fail at it most of the time. The market doesn't reward activity. It rewards patience. If you react to every headline and every price move, you're not investing. You're gambling. Here's what smart investors understand. You don't need perfect timing. You need enough time in the market. Over the last 100 years, the stock market has gone up more than it has gone down. There were crashes, there were recessions, there were wars and crises. And still, long-term investors came out ahead. The longer you stay invested, the lower your risk becomes. Time turns volatility into growth. One of the most powerful strategies in investing is dollar cost averaging. It means you invest a fixed amount of money every week or every month. When prices are high, you buy fewer shares. When prices are low, you buy more shares. You stop trying to predict the perfect moment, and you remove emotion from the process. This one habit alone beats most active traders in the long run. Simple, boring, extremely effective. Another mistake beginners make is going all in on one stock. Smart investors spread their money across different companies, sectors, and markets. Why? Because no one knows which stock will be the next winner. Diversification protects you from being wrong. It keeps one bad decision from destroying your entire portfolio. Risk management isn't boring. It's what keeps you in the game long enough to actually win. Here's the mindset shift that separates amateurs from professionals. Stop thinking in days and weeks. Start thinking in years and decades. The stock market rewards people who stay calm during crashes and patient during boring periods. You don't get rich fast in stocks, you get rich slow. But slow wealth is the kind that actually lasts. Consistency beats brilliance, every single time. So here's the real secret to winning in stocks. Invest consistently. Diversify your portfolio. Control your emotions. And give your money time to grow. You don't need to be smarter than everyone else. You just need to be calmer and more patient. If this video helped you, hit like and subscribe. I post weekly long-form stock breakdowns and daily shorts with quick investing lessons. And now tell me in the comments, are you investing for the long term or still trying to time the market? Also check my shorts for daily updates and the full videos for deeper analysis.